Hey everyone, Couch Investor back to another video for today. So I owe you a video about Twilio, so here you go. Now, the stock has already crashed around 14% or so since they reported earnings. What happened? Well, basically growth is slowing down even more, and then guidance didn't meet expectations at all. Now, with regards to Twilio, although the business might be great, the product might be a good one, because of the clients that they attract and the current macroeconomic environment, the results are not really surprising, since those companies that use Twilio daily will probably spend less or are cutting costs just like every other company out there. It is obviously hurting a company like Twilio. Now, when the macroeconomic environment becomes a bit better, those companies will probably spend a bit more, and then you'll see the business like Twilio reaccelerate in growth. That's just the way it is. Now, they had a couple of announcements, some wins during this quarter when it comes to bigger clients as well. Of course, they also announced last time a $1 billion share buyback program. They have enough cash. We've talked about a potential acquisition because they have enough cash. They're not burning that much money anymore. Okay, they did a buyback program, $1 billion. Right now, they have already done 25% of that budget. They will do up to 50% in the first 6 months, so they're well on track to do that. Of course, this is returning value to investors. At least it's diluting investors less because there's still stock-based compensation as a percentage of revenue that has also come down quarter over quarter and year over year, so that's great to see. Now, what I did find funny is the analysts. Going into this report, the average price target of Twilio from analysts was around $84 or so. Of course, right now the stock is under $50 and most of the analysts have now lowered their price target. I think now the average is a bit closer to $60, $65 or so. Again, analyst price targets, take it with a grain of salt. Now, with regards to the couple of wins and deals they made during the quarter, of course, there's two parts of the business, the data and application side and then the communication side. The communication side is around 84% of their revenue. So first we have here in the data and applications business, they closed notable segment deals with Cricket Wireless, Sanofi, one of the largest healthcare companies in the world. I hope I pronounced the name correctly, and MongoDB. They also signed a multi-year commitment with Cricket Wireless and existing Twilio communication customers using SMS and email, who is now rounding out their commitment to the Twilio platform with Segment and Engage. As for the communications business, they say here they signed several large deals, including their largest email deal ever with a marketing automation company who will embed Twilio's leading email API into their platform. And speaking of email, they recently crossed 7 trillion emails sent since inception. Pretty crazy when you think about that number. Then they say, in addition, we signed a 7-figure deal with Datascore, an innovative AI company which operates a predictive analytics platform for data-driven marketers, who significantly expanded their programmable voice use case in Q1, which in turn led to increasing their customers' return on investment by around, more than 24%. They also signed a 7-figure Verify deal with a leading AI company. Again, AI, you'll read it more and more. With a leading AI company who will be using Verify exclusively for their global user authentication. Of course, over a long period of time, these types of deals will certainly turn into a huge tailwind for Twilio when the market will turn. Whenever that happens, I don't know, but right now, usually during tough times, if you're building the groundworks for the future, when the market turns, you will see a huge boost in an instant. Well, maybe not in an instant, but at least faster than expected. Now, before we continue with the earnings report, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. Would really appreciate that. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So, as for this quarter, the reported revenue grew 15% year over year to just over $1 billion. Organic revenue grew the same. Now, data and application revenue grew 19%, but that's a small part of the business right now, $120 million there. Communications revenue grew 14% to $847 million, and then their other revenue grew 26% to $40 million. Now, there are some other important numbers here. The guidance and outlook we're going to touch on in a bit. So you can clearly see the trend here, right? Quarterly GAAP revenue growth has been slowing down for a long time right now. Same can be said for organic revenue trend, slowing down as well for the last 2 years. Now, and the same story continues here with dollar-based net expansion. And this is a number that is pretty important because this means that the existing customers with Twilio are not spending more right now, which again reinforces the point I made at the start of this video. A lot of their clients just can't spend more today because of the current situation. That's just the nature of their user base. This will, of course, grow or increase when inflation comes down, interest rates come down, etc., etc. Right now, it's just a matter of, well, the business is hurting. Let's see how low this number will go. As for concentration, top 10 customers as a part of revenue, not that much has changed. We're now at 10%. And when we look at gross profit, non-GAAP gross profit, that is, growth there follows the same trend as revenue, and all the rest has been slowing down for the last 2 years. Overall, yes, it is still growing, but it has been slowing down tremendously in the last 2 years. Now, with regards to guidance, and in my opinion, that's where the market was pretty disappointed. So for Q2, they expect guidance to grow between 4 to 5% year over year. So again, that growth year over year is slowing down. Non-GAAP income from operation between $65 and $75 million. And then diluted earnings per share, non-GAAP, of course, between 27 and 31 cents. Now for the fiscal year 2023, this is an updated guidance. They expect non-GAAP income from operation between $275 and $350 million. Now overall, they are still stating the same thing here. Stock-based compensation as a percentage of revenue lower in 2023 than 2022, reducing to 10 to 12% of revenue for fiscal year 2027. And then again, for fiscal year 2027, they're still targeting GAAP profitability for that fiscal year. And yes, if you look at those numbers here, organic revenue annual growth and then data and application annual growth, yes, that could mean that they will be seeing reacceleration probably in the later part of this year. Now, with regards to the stock price, we are now entering or closing in on the same price area we were from October until the end of December. It will probably be a nice support line there. But in my opinion, if you're looking for a reacceleration or it going back up to around the $70 range, I think you'll have to wait another quarter or so because, well, the market would want to see maybe some improvement, some real acceleration in growth before it commits to higher prices. That's just my opinion. But right now, if we can form again a solid base around this price right here, between $45 and $50 or so, like we've done in the past, I think that could be a positive thing for the future of this stock. Of course, the business does have to perform and execute correctly for the stock to actually go up. Now, when you look at the MACD, actually now on a weekly chart, it is turning bearish. As for RSI, it is coming down at around 38, not oversold on a weekly basis, by the way. So overall, with Twilio, it's pretty simple. The business, the products might be exceptional products right now, but because their user base are extremely susceptible to the current situation in the macroeconomic environment, of course, that will hit the core business for Twilio. If the customers cannot spend as much as they were spending before, of course, they will not spend more with the likes of Twilio. It's just the way it is right now. But if we do see some positive reaction in the overall market, if the Fed will stop raising rates, if inflation continues to come down, then yes, these types of companies will probably reaccelerate their spending and you'll see positive results with the likes of Twilio. And so that's what I said. You will have to wait until the next earnings report. Maybe the stock will be up already. I don't know. Could happen. But if you want to be sure and not bet, then yes, I would say look for a positive reaction maybe in the next quarter, or maybe if the company will announce something special, wait for that as well. That's just my opinion. Of course, do share your opinion down in the comments below. Do you still hold Twilio? Are you looking to buy? What do you think about this quarter? Let me know down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.